Apple has beat earnings last week.
Yes.
What does it mean for the stock market overall? And what does it mean for the economy?
I'm sure Tim Cook's primary bedroom looks amazing.
It's primary office.
For real. Shout out to Tim Cook and everyone at Apple. Revenue was at 94.8 billion versus 92.6, which was expected.
Yes.
And then iPhone was at 51.3 billion versus 48.9.
Yeah.
Now they adjusted guidance and revenue because we're in a softer economy. I get that.
Yes.
But it goes to just on revenue alone, they made 94.8 billion. So if you're looking, should I invest Apple versus another company? You have to invest in the companies that are making the most cash. So write this down. Whoever has the most revenue should be in your consideration for what's in your portfolio. So even there on the iPhone side, they did 51.3 billion in a quarter.
Yes.
Which is bigger than most companies will do in a year.
And that helped the earnings.
Absolutely.
Right? The 2%. Because, they weren't expecting the iPhone to have any increase this quarter.
Absolutely.
The fact that it went up 2% was like, all right, great. This is incredible. So, yeah. Can I run them down?
Go ahead.
Because when we talk about the verticals, a lot of people just think Apple, they might think there's just the MacBook or it's just the phone.
Or the
so
iPad,
let's go down all the verticals and we'll just say that the money that was made. So you said iPhone, the revenue was up 51.3 billion. Wall Street expected it to be at 48. So that was a plus. The MacBook, it actually went down. This was something that we'll talk about. 7.7 billion versus 7.8 billion. The iPad also went down in revenue, 6.67 billion. As opposed to the 6.69, and then the other revenue for the products. So we had 8.7 billion as opposed to 8.43, which was expected, and then the services. So the services is crazy because you think about it.
Yeah.
You got Apple Music, but one of the biggest things is the deal that they have with Google.
Yep.
To be the #1 search engine on.
And we talked about this last week in the not beefing. You would think Apple and Google are competitors. They're technically Apple, Microsoft, and Google are like a soft monopoly that operates together.
20 billion, almost 21 billion in the quarter just from the services alone. Just think about that.
Yeah.
Just having a partnership or having a deal with a company has a product that you're saying this can help us in our businesses. Yeah. Obviously the app stores inside of that as well, but 20 billion just in services.
Yeah.
So you have all these verticals. Now, if you look at it, if the earnings, all of those went down, except for the iPhone increase. Yep. And Apple still doesn't give future guidance. They haven't done it for the past 2 years.
Very smart.
They haven't.
On decline. Yeah.
You don't know what to expect, but we do know that growth is exponential each year, and we know that a new product is coming. Everybody's waiting for June 5th or June 7th for the date for them to announce. So, I mean, when Buffett says this is the greatest company we've ever seen,
I haven't seen anything like it.
It's unprecedented, man. It's unprecedented, and they the board authorized 90 billion in share repurchases and dividends,
which is huge.
Right, when you buy back your shares, it brings back the value to the more shares, and the way they're doing this is just.
And if we look at Coinbase in comparison, when Fred Wilson was invested as a venture capitalist, they sold everything off, and then also the CEO, Brian Armstrong. And last time we here in Miami, I had a controversial take about Coinbase. A year later, and that's kind of true. Yeah. Shout out to everyone in the crypto space. I love you all. I don't want any smoke, right? I'm come here in peace. No podcasts or currency wars on my end. But if you look, a great sign if a company is doing well is if the companies are doing buybacks and if the executives there are holding on. I want to run off some quick stats. So for Apple, 1 year or year to date, it's up 38%. 1 year from today, it's been up 14%. Over the last month, up 7%. PE ratio is at 29, which is low, which is absolutely amazing. Market cap of 2.75 trillion. And the percentage of floated shorts is 0.73%. So that tells you that no one thinks this company is going to fall apart. Invest in the greatest company that's ever been publicly traded for the long term, and you will be okay. Once again, it goes back to investing being really simple if we stick to our principles. And I wish more companies were this well ran so we can have like a more diverse swath of companies to invest in. But they are clearly like the LeBron James of this, or Devin Booker, which one is more efficient of this era, right? Either way, I love Dev, but I don't think Dev making it to the finals. But welcome to Third Take. But this company is probably the most efficient ran. If I look at revenue per employee, that's at 2.34 million. So if you can compare these stats and see versus Tesla, how well this is being ran, and Tim Cook and the entire team is incredibly focused. That's another thing at Berkshire. Even when they mention Ajit and the person who's going to replace Buffett, they're not on social media. They don't eat up that much space. They're just head down, focus on running the company, and that's a metric and the fundamentals that we have to focus on more, for sure. Yeah, especially during a recession.
I'm glad you brought up Coinbase. Brian Armstrong was in the news. He doubled down again, right? Criticizing the SEC for what he feels like is a lone attack on anti-crypto establishments, him being the number one of it. And so from an investment standpoint, if people are looking at it, we kind of went over this 2 weeks ago when we were talking about we invest in U.S. companies, but if this U.S. company can't thrive here, he'll be forced to go international, which is going to lose some of the trust of some of your investors. So it's in a tough space for him.
Yeah. They should sell to JP Morgan. And I'm not here to cape for JP Morgan. But it's
just add to the asset class with them.
Listen, if the CEO of YouTube comes out and be like, hey, we don't want any black people to be like leading figures, like we gotta go to Twitch or some, like you have to make an adjustment. Now if Gensler leaves and then the next SEC chair is crypto favorable, they'll have a chance to thrive. But when you have a regulatory body basically saying we don't want you here, and you get a Wells notice, and they won't tell you how to play within the lines, how do you have a competitive advantage? And I think Brian is a great CEO. I just think that the regulations won't allow them to thrive ever.
You just brought up a great point, the Wells notice. You want to just tell people what the Wells notice is?
I mean, the SEC is basically putting you on notice that you are doing some unscrupulous things, which I think is unfair. Like if you ever play basketball, you went to state and you're like, hey, these refs are not going to be in our favor. The Wells notice is like, you listen, you need to be won by 20 before we give you this title. Right? So now they have a few days to reply. Of course they're going to reply. They're going to fight back. But and I found it interesting, even all like the staking rewards, when I saw the rollout of the Apple Rewards card, it looked very similar to like what Cardano was doing. So I'm like, now, if I can give you all the APY returns and the safety of Apple, that allows them, and Apple has a great relationship with the government, the SEC, and the White House, that kills the majority of mainstream who would never go to crypto, Ethereum, Bitcoin, Cardano, and you can go there. That's another attack that people aren't talking about enough. While the SEC is the direct attack, the Apple savings card being pushed to have $1 billion in 4 days.
1.4. Ridiculous.
That's a side attack as well. So
the Wells notice is almost like a subpoena for business.
Yes.
Right? The SEC says we've done an investigation. The next steps are enforcement action is about to happen.
Yeah.
And so they've been served with that.
If they get an enforcement action, man, it's
not good.
Well, yeah, let's talk about that briefly too, because Apple definitely, we talked about their savings account a few weeks ago. So now in the first 4 days, they brought in $1 billion in deposits.
That's insane.
So yeah, so the newly launched savings account, they attracted nearly $1 billion in deposits, according to a Forbes article. So
was that 3 weeks ago?
I think so.
And for context, before First Republic went under, they had $19 billion.
Yeah. And once again, this is gonna be
that's great content.
4.15% interest. And it's backed by Goldman Sachs.
Yes.
And it's adding to Apple's growing financial services offerings.
Yes.
And it's for Apple users, Apple Pay users, I believe. So yeah, let's talk
Apple Card users.
Apple Card users, yeah.
So $1 billion in 4 days. Where do you see the trajectory of this long term? Like, what would be your crystal ball for this particular product? I think 5-10 years from now.
10 years, or maybe even 5, they should have $20 billion on it. Because here's the thing: if interest rates are slowly going up, FOMC, of course, raised a quarter of 1%. I think the rate that we'll need to get to before we top out is 6.5%, which will crush the market, which is what they want to do because they want to slow spending and increase inflation. People, in times of recessions or depressions, people are going to look for safety first. So like when Countrywide went under in the last recession, it allowed Bank of America and JP Morgan to become the safer alternatives. Now, with everyone using these phones and Apple building trust since the 1980s, if I have to bank between them and PNC, shout out to PNC, I love you guys. I've banked with you for a long time prior to going to Capital One, but I have more trust with Apple than I do any major bank. So, and I know there's some places you guys have highlighted in the comments where you can get a higher yield, but Apple has a higher trust score than Robinhood. Also, if I can get 25% or 30% return in the stock, why don't I just bank with Apple? Because the probability of Apple going under, they are literally the too big to fail. If the government has to pick between Apple and JP Morgan, Jamie Dimon will go work for Apple. So it's all about who is the safest entity and institution, and Apple is probably one of the largest of all time. I think in 5 or 10 years, they have $20 billion under management. And it's the funny part. This is like a side project for them. It's not a main focus at all.
Right. And we just spoke about the verticals, right? So we didn't even talk about financials. So like 20 billion, that would be on par with what we just said that they get from the services component. I mean, when you think about that type of money under management, where does that place it? Do we see it? Because we have the big four when we talk about in banks. Top 20? Top 15?
Top 20.
Top 20.
And Apple's so smart, they will never come in and be a direct competitor. They say, we just want to be an ally to assure the safety of the American citizens, to give some safety. And then I'm sure they have some preferred partners like Goldman that they'll work with down the line. And then also then when they make the move into healthcare. So that may be another 20 to 40 billion. So if you get 20 billion under management here, 20 billion in services, if they announce that the glasses product, amazing. Healthcare, that's another 20 billion. And now you're really in the biggest 4 sectors of all time.
Yes. All under one umbrella.
With great leadership, great management. So I don't know what would ever, like IBM lost its way. The thing that makes Apple unique, kind of like LeBron, deep into their 40-year, 50-year, because normally once the stock gets to like 30 years, they begin to taper off. They are continuing to find ways to innovate and scale into different industries, which like Microsoft never could have been like a car manufacturer. Or like, would anyone ever wanted to bank with Microsoft back in the day?
No,
absolutely not. So unfathomable.
From that standpoint, then it debunks the theory of companies having a 30-year run of dominance.
For most companies, this is like an exception.
This is the one.
This is like if LeBron and Jordan was one person.
This is the outlier.
Yeah, outlier for sure. But it goes to show how you should run a company, based on trust, delivering on returns, delivering on promises. Of course, they've had some failed products, but they usually bounce back really well. There's no stopping this company anytime soon.
Yeah. I mean, and kind of the question was like, what does it mean to the market? I remember when I called you Wednesday. I said, look, and we spoke about it on Market Mondays last week. Like, this is important. Outside of all the companies,
this is the one.
This is the one. And so when we saw the iPhone beat what Wall Street was estimating and how the stock went up, I'm like, all right, great. That means at least Thursday and Friday, we're going to see some positive days just because of the weighted impact that Apple has on the S&P. And from a lot of the ETFs, especially QQQ, and we talk about XLK all the time, but like the amount that is weighted on that company, if it has a negative quarter, we're in trouble. Yeah.
It's going to affect everything.
Yeah.
And the great part is like they're currently hunting for what will replace the iPhone. Like a couple analysts believe like in 10 years, the iPhone will kind of go the pathway of what the iPod went. For those of you who don't know, at one point, the number one driver of revenue for Apple was the iPod. Yes. Then the iPhone came out and all the iterations from there. iPhone 15 should be coming out pretty soon.
Yeah.
But I don't know if it will be the glasses product, but they're looking for a revenue replacement for the iPhone. And if they do that, that will extend them another 10 or 15 years as well. So
yeah, and the reason a lot of from what they're saying that the numbers were down for the MacBook and the iPad is because the comparison. You're comparing it year over year.
Yeah,
and so you're talking about a time when people were buying computers at a different rate. They were buying tablets at a different rate now opposed to this year, where it's like, all right, they're not buying them at the same rate. Plus, there was some shortages. Obviously, there was some supply chain issues, and so that affects the numbers. So yeah, I think we'll see those numbers change over the next 2 to 3 quarters. But we saw it even now, like with the earbuds, it almost looks like they're bringing the iPod back, right? It has the new ones that have the screen on it. So, I mean, they're just going to keep innovating, man. Shout out to Apple. My My portfolio looks great with them in it.
173. Oh, baby. Oh, baby. Buy the best.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.